What's up, everyone? Just going to go through the EU breakdown of the week just gone. Another video with Freedom Forex trading. So, getting straight into it, EU was a bit of an interesting week. Interesting in the sense that we didn't really move, and we've started this week pretty well in the exact same point as we were at the start of last week, within about 10-15 pips of that area. So, yeah, it's a very, very interesting sideways week that we have with EU, which explains the very little amount of opportunities that pair presented throughout the week. It was not the best trading conditions as we're caught inside of the internal range. It was made from new NFP the weekend before, the Friday before. So getting into it, coming into the week, now I'll jot down a couple of time frames here. So what we had was obviously sitting inside this internal range here. Now, really, we don't want to be looking for any trades inside of an internal range. Weren't dealt with too much else in the way of other opportunities that we could look at. So we had to work with what we were given. Monday, there was a complete write-off for EU as we were really just sitting inside of this internal part. London was here, just nothing to do with that. It's not worth looking at. Price can really dance around as much as it wants inside of this internal range here to sort of pick where it wants to go. And until it decides to get there and start taking some of these external pieces of structure, or especially at least coming towards some of our more actual significant pieces of structure, it's just going to keep inducing on itself, going higher and lower without much in the way of actual direction. So what we had though coming into Monday, obviously sitting inside that point, like I mentioned, nothing to do there. New York pushed up into here. There was a 5-second point up in here that price did mitigate and then push down from. However, putting weight on a 5-second point for a Monday trade is very, very risky in my opinion. It's not something that would generally hold a lot of weight. And if you're having to go down to the 5-second time frame to try and find a point to take a trade from, you're probably just searching a little bit too hard, and it's not something that we want to be doing. We want to be trading at high probability areas, and a 5-second point is not a high probability area, especially after as price has pushed down, it has not given any significant internal breaks. So nothing on Monday at all. Tuesday, similar story, sitting inside that same point. So coming into our London session, we had obviously an inducement of Asia low. We had this point down here, which did induce the previous day Asia lows. So, it has taken a little bit of liquidity, but in terms of where the market could be looking to go, it might even want to come down and take out this point as it's a non-structural low. It may want to come and take out this internal high. It's really, really iffy on what the market is looking to do. This isn't generally enough for us to look for a trade. So that was also a write-off. Nothing that we're looking for in there. And then London session, same thing. Came and just sat inside of this more so like 5-minute internal range and didn't do anything either, which you can see the small amount of volume, small amount of movement that occurred during that London session, which obviously equates to what we saw with price not taking anything. In New York, price did step up to this point, which obviously is the high that led to the break of that internal low. So price was sitting up in here, and no opportunity for us to look for a trade. We were potentially keeping an eye on this area for a high probability entry model, which didn't provide. Price more or less came into this area and then started to work its way straight back down. If you did manage to get into a trade up here, it is an aggressive trade. Yes, it is valid from some perspectives, and you would have caught a nice run down. So well done to anyone who did take that trade. Not really anything that we wanted to be getting in. A part of those, our data sort of tells us that if you're taking entries out of areas like this, it needs to be a high probability entry model to show you good confirmation that these buyers are now transitioning to sellers, and we didn't get those confirmations, so for us it wasn't worth looking at taking that trade. Wednesday, same story. We were sitting quite down the low at the bottom of this point. I was looking for price to come and take out this low now that we were starting to creep our way down before doing anything else. As again, this isn't an area that's going to really hold with price action. It's going to get taken out. It got a lot of equal lows here at Asia low, and it's an internal low of our external range. So as price is sitting down here, don't want to be looking to do anything there. As you can see, London session, again, very, very choppy, very sideways, very dribbly price action, as I like to call it. Not the sort of price action you want to be trading. Again, New York, it's just sitting there. This for New York session, if you would generally compare it to how New York usually moves, if I go back to a previous week, And you can see that this is a New York move. This is a New York move. That obviously New York move didn't do a hell of a lot. This is a New York move. Like New York will generally have really, really solid moves. So we don't want to be looking to trade New York. When we're sitting like this, you can see how low a volume and how little liquidity the market has clearly taken, which has affected the actual size moves of that session. So again, that was a write-off. Now, Thursday, the market started to clean up a little bit as we've finally taken that low. We've come down, we've induced our internal low, giving the market finally some volume and a bit of direction, a bit of structure. We then obviously had a very, very strong push. Now, yes, this was a news trade. This was a very, very valid and clean setup to look at. Really nice lower time frame entry model that we use. So you could have taken that. However, with news being, 10, 15, or about 20 minutes after that move would have tagged you in, extremely high risky trade to take. You generally want to be getting in news. Like if you've got news coming out in New York, you want to be getting into the trade in London, and that just wasn't possible. Even if you got in right down here, the market generally sort of sits and does a bit of this and then goes boom when you get the news release. So you don't generally get far enough away from your entry to get off a news trade. However, though, after the news trade did come up and mitigate a significant point that we're looking to trade from, we did get into this sell on the way down that ran 1 to 3. I was looking to hold price a little bit longer to try and hit at least a 1 to 5, which is where I was going to take full volume. So I did take a break even on this trade, which I was more than happy to do, and that's perfectly fine. Had good potential to fill some of this imbalance and potentially come and take out this next internal low now that it has mitigated a significant point and swept some liquidity. So, yeah, unfortunately, there's no follow through on that trade, but we didn't take a loss, and that's the main thing. Moving on from there, same thing. London, sitting in the middle, no liquidity taken, sitting inside our Asia range, hasn't taken anything significant structurally. So we get that same sideways price action that we've been seeing a lot during London lately. And then New York did have quite a clean setup inside of here. Very, very aggressive though. You would have had like a 1.7 or 1.8 pip stop. Too small of a stop loss, and that's even extending it. The point that you were looking to trade from was only a 1 pip point. So it's not something that we were looking to get into. Too small an area, not something that we want to be looking to touch. And again, news was straight afterwards, so it's not something that we were looking to trade anyway. So overall, as a recap, for Euro USD on last week, had these two opportunities. One of them is really the only one that you want to be looking to trade. New York trades when you've got news are just too risky. Like getting in after news is not too bad, as you can generally find that price wants to fill a lot of the imbalance quite quickly, like it did on this push up. It filled it straight away. And then obviously on the pullback up, it filled a lot of it here. We did actually try to get into this buy here that I'll actually quickly break down. I believe it was GU News, but we did try to catch an entry inside of here. Prices didn't come back and tag us in, so we had the pleasure of watching that one run without us, and then obviously couldn't trade it on the way back down. So yeah, that was just a bit of a story of that week. So moving forward, coming into this week, look, really just waiting for price to give us a bit of direction. EU is going to be holding a lot less of focus for us with our trading for the foreseeable future at the moment. Not providing a lot of opportunities, not ideal to be putting too much brain power towards this pair. When there's other pairs like AU, USD CAD, GU, and even some of the other minor pairs that move, even better and provide more opportunity. We'd rather put that brain power towards them. So definitely something we'll be incorporating. Overall, though, break even for the week on EU, so no losses or anything like that. So, capital preservation and risk management is always key with your trading. So that was on point. So everything's all good.